Your first £10,000 invested will be probably the hardest part. Not 100k, not a million. The first 10 will be the biggest grind, because going from 0 to 10,000, that 5-figure goal, it showcases discipline, but it also gives you something tangible to work with. So obviously, yes, once you hit 10,000, everything will speed up. 10 to 20k will be faster. Then all of a sudden 50k. Then you can compound your investment and your dividends and hit 6 figures. So today I'm going to go through why consistency matters and a plan for you to get to 10,000 quicker than you ever thought. Now let's talk about milestones. Firstly, £1,000 equals belief. You probably realize I can actually invest now. I understand the apps, I understand the elements around the gains, and more importantly, what the red and the green numbers mean. 10,000, momentum. This is where you break through that horrible, painful stage where nothing is really growing fast, but all of a sudden it does. And then you hit that number and your portfolio starts to grow and you can start to see the traction. This is where maybe you will probably compound. Now again, obviously 100,000 is where you start to kind of escape a little bit. You start hitting those 6 figures, your future growth becomes more about time than effort. You have a base, you have options, and the snowball can start to roll. Before we fly off the handle, please do, if you like this sort of stuff, like the video, subscribe, and let me know how long have you been invested. Firstly, build an emergency fund. Not invested, not in crypto, not anything high risk, in cash. On the screen, Monzo, simple. Put it into savings pots. You can do a lot of rounding up with Monzo as well if you're on a different plan. But more importantly, before you put any penny in any stock market, realistically, to remove the risk management element and to remove the emotion, have money that you can rely on if anything goes bang. Rule number 2, and an obvious one, the ultimate tax code for cheating essentially, is having your stocks and shares, any investment, into a stocks and shares ISA. Gains are tax-free, your dividends are tax-free, depending on what fund they're in. And more importantly, anything can compound up and you don't have to withdraw it to do tax returns, which is hugely important. On the screen, there's a list of all the different providers out there. There's loads of different ones. Some of them have monthly bills, some of them don't. Personally, I use Trading 212. It works very, very well. There's other ones out there that are very, very good. But yeah, keep it super simple. You don't want to pay tax on your returns, and that will come apparent later on in this video. And again, going back to the banking side, auto invest every single month. Set up a direct debit. Make it boring. Make it automatic. Make it so you forget about it. People fail because they invest based on emotion, not routine. And obviously, yes, your first 10k is built on consistency, not timing. You're not just going to flop 10k into a broker, are you? I hope not. Now, for obvious reasons, yes, you can talk about the obvious in the room. If you invest £200 per month with no returns, you are going to get to 10k in 4 years. That is just saving money. No skill, no timing, just discipline, right? However, if we change something and make it super simple, £200, let's just say over 5 years, your contributions are obviously 12k and you're making a little bit of money off 5%, really low, but it will speed up the growth. However, if you scroll down a little bit here, you're going to start noticing over the course of time, this money is going to really increase as you continue the habit. Now, I'm not saying invest for 30 years. I'm just showcasing that over the course of time, your contributions will eventually get beaten by investment growth, which is the compound effect. You need to start somewhere, and over the course of time, it will eventually grow. If you start adding dividends, which I will talk about, it will be even more aggressive, which will make it more fun. But that's a thing. That's a snowball. It's simple. Takes a bit of time to get going, then suddenly you start noticing things. And then all of a sudden you start seeing the natural growth of it because money makes money. This is why the likes of Warren Buffett and other people have got incredibly rich over the course of time. However, what you need to do, you need to choose your investment style. Because on the screen here, we have the all-world fund. Very, very simple. You can have the S&P if you want. You can have this. You can have other ones. All world index funds are easy and it makes it simple because you're going to get a decent return over the course of time. And it's great for beginners who want simplicity and longer term growth. Now, if you want to add a little bit of a caveat to dividends to get a bit of a return, and I will give you a little life hack in a minute, you will showcase that you are getting dividend stocks that are good for consistency. They will reinvest those dividends. Perfect if you want something more stable and lower volatility, especially when it comes to the income side of it. However, if you're a bit of a rogue warrior, you can always have a percentage of your portfolio in the emerging markets, higher tech ETFs, all world kind of technology, whatever, I don't know. Much, much higher upside, a lot more volatility though, but it works if you're younger with a higher time horizon. But that life hack is having a blend of all three. That's perfectly fine. My high risk element is Bitcoin, realistically. And then I have dividend ETFs as well as individual dividend stocks. That's mine though, not yours. But going back to myself for a brief second, when I first started investing, I started off really well. I was in Nutmeg, and then I was in Bitcoin, and then altcoins. And then I started to get a bit, I'm a Billy Big Bollocks here. I've made loads of money. And then I started chasing the hype. And then I'd start switching up my strategy. And then I'd start panicking and selling because my risk management wasn't on point. I learned the lesson the hard way. But this is what everyone will go through. And I can guarantee if you start making more money, you will start thinking you're the dog's bollocks. And then all of a sudden you'll start doing random stuff and over-risking. You don't want to do that because over the course of time, that will lose your self-time and always lose your money. So yeah, if I went back in time and stuck to one strategy that worked, I'd probably be a lot wealthier right now. And I know that for sure because I've double checked. But the idea is to let the compound build. What you're seeing on this channel is a small percentage of my net worth versus say my Bitcoin and cryptocurrency side and obviously other bits and pieces. But I'm hoping to showcase that. This is why I'm saying like the video, subscribe, because what I'm doing is a same journey. I want to take my £62,000 portfolio to 100k in the next 2 years, hopefully. And then from that point onwards, I would like to take it to 1 million eventually. It's all about time. And I want it to do the heavy lifting, of course. But the question is, how long will it take to get to 10k? Now, obviously, £150, £300 per month, you're going to get there 2 to 4 years, obviously. If you're putting a lot more in, obviously, a lot faster. Maybe 2 years, maybe 1.5 years. But the key thing here, it isn't about the exact number, it's about the routine. But let's talk about how this can get faster. Now on the screen, I have a dividend calculator. It's in dollars, it's not amazing, I know, but it will just showcase something. Now, I mentioned not too long ago, have 3 potential areas. Passive, for the all world funds, keep it super simple, beginner friendly, most of your weight in there. Have some dividend income, even if that is through individual stocks or through the ETFs, fair enough. But mainly as well, have some growth as well. As you get older, you want to put your money into the dividend side of it to get an income. Now, on the screen, I put $200. Just imagine it's pounds, by the way. And then roughly what mine is at the minute, kind of expected annual dividend increase in terms of the growth of the dividends. That's a bit wishy-washy, but you'll get the idea basically. And the obvious fact of this is reinvest in your dividends. What's going to happen over the course of time, over 35 years, it is going to snowball. And as you can see, it will gradually grow very aggressively. Then all of a sudden, it will get mental because what's happening? Over the course of time, your dividend income will grow. Your stocks will get stronger. And yeah, there'll be some little fluctuations here and there. But if you keep it simple, especially in an ETF fund, you're going to start noticing the yield on cost is going to increase massively. Therefore, the shares that you bought months back, years back, whatever, will start giving you more money for what you invested in. So over the course of time, what is actually genuinely happening here, you are starting to notice that this will start to compound pretty damn aggressively. Then all of a sudden, your portfolio balance is getting bigger. Your contributions are staying the same, but more often than not, what you've probably noticed is that the annual dividends is going to start snowballing pretty aggressively out of control. And all of a sudden, with very, very small amounts, within 25 years, 30 years, you're making a decent amount of money. But as I say, with that being said, guess what? You can move other assets into this sort of funds as you get older, and then your income will increase and you can live off it. But if you take one thing away from this, 10,000 is just the first phase. It will be the biggest grinding phase though. And after that, it should get easier because the understanding will increase, the routine will be bedded in, and you'll start to notice compounding. So if you want to follow along with all the wins, all the mistakes, please do subscribe. And yeah, if you're not yet done so, watch this video here. So we'll go through some dividend ETFs that might well give you some returns and some passive income.